Tory, and I've been a good boy, and now I'm going to talk to you about another Valuation Master Class case study. The question is, how much can Gazprom prosper from Europe's energy crisis? Welcome to the Valuation Masterclass case study, where you'll learn about interesting stocks and how to value them. What's interesting about Gazprom is that an entire continent is dependent on its gas. This is Andrew Stotts of A Stotts Investment Research and the Valuation Masterclass. Let's get started. But before we do, remember, this information is for learning purposes only. It's not investment advice or recommendation. So Gazprom is in the energy sector. It's a state-owned Russian giant, and it is the world's largest national gas supplier, accounting for 15% of global gas production. So the question is, how much can Gazprom prosper from Europe's energy crisis? There's three things to know about this company. First, there's a bright future of natural gas as a transition fuel to renewable. If Europe holds back Gazprom expansion, no problem. They just pivot to Asia. Domestic market is still not fully penetrated yet. So some key statistics. First, what we can see is analysts. There's 13 analysts covering the company, and they have a $460 Russian ruble price target. That's a 53% upside or a strong buy. The price to book value of this company is a crazy 0.5 times. The dividend yield is 4%. Of course, you may say, Andrew, but I've got to convert my money into Russian ruble in order to buy it, and therefore there's risks. Yeah, that's part of the reason why it is a relatively cheap stock. That's one of the reasons, and that reason is possible, is possibly something that you want to consider. But if you can, man, this is interesting. My valuation estimate is 395 and upside of 32%. So that would be a buy. Let's look at the sales breakdown of this company. Gas sales is about 48% of total revenue. Refined products like LPG and hydrocarbons about 28%. Electricity and crude oil about 16%, and gas transportation services and others at about 8%. Now, the breakdown by region is 47% to Europe and Russian Federation about 46%, the rest to former Soviet Union countries. Not any China in there, although that could be in the future. Now, the price has seen a strong bullish rally, and that could continue. Basically, throughout the past year, the 50-day moving average has stayed above the 200-day moving average, which has been a strong bullish sign. The share price is up about 35% year to date, and volume RSI recently returned to the 50% line, providing no real clear signal yet, though I think there's a possibility it can break out above. What's the story? Let's get into that. First is a bright future for natural gas as a transition fuel. Here is a chart of the supply and the production and consumption of energy in Europe. And what you can see here is that Europe's production is about 8 gigawatts. I forget what that is, GWH per million, but basically it's 8. And the actual consumption is 16. So almost double the consumption as they have as their production in Europe. So there's a big problem. Now, that production that they have in Europe has been also augmented by renewables coming in. And we can see that green bar in this chart shows renewables have been rising from about 2 up to about maybe 2.5 or so, but still far away from being able to supply what Europe needs as far as gas, and fuel in general, or energy. In addition, we can see the red line here shows Europe's production has been falling every year. Yeah, they've been cutting production. Gazprom's major export market is Europe, which committed to an ambitious transition to green energy. However, renewables are still far away from providing sufficient energy for Europe's consumption. And therefore, the European Union recently labeled natural gas as a temporary sustainable fuel. Guys, wake up. If someone in your government is talking about transitioning to renewables, look what's happening in Germany. It is not happening nearly as fast as what people think. So this is a good indication of that. Now, beneficiary of Europe's self-inflicted energy crisis is what basically Gazprom is getting. Natural gas has become the dominant fuel in Europe, With the demand supply imbalance, natural gas prices have skyrocketed. And given the growing demand and unwillingness of Russia to increase supply, the situation might even get worse. In fact, Gazprom enjoys higher export prices, leading to record revenues in 2021 and 2022. Now, I'm showing a chart here that shows the natural gas and the crude oil and the prices. And the main thing that we can see from this is that natural gas prices since May of 2020 are up basically 400% or so. And oil prices are more than double, about up 3 times. So if Europe holds back Gazprom expansion, then they're just going to pivot to Asia. So here is Gazprom's national gas exports to Europe, and it's about 200 billion cubic meters. Despite Europe's energy crisis, Gazprom does not increase its supply unless the German government approves its Nord Stream 2 pipeline. Nord Stream 2 allows gas to go from Russia to Europe and especially to Germany. The pipeline has a capacity of 55 billion cubic meters and is ready, just awaiting approval from Germany. However, Nord Stream 2 has become a political issue in the context of Russian-Ukrainian tensions. In fact, it's fascinating what's going on. Europe and Germany need this gas from Russia, and the US now is stepping in and trying to disrupt the situation. In fact, I would argue that the US is trying to start a war. And what I'm thinking about is that, we have the case where presidents go into midterm elections and they lose the House and they lose the Senate. We've got a November midterm election coming up in the US. The only president since I was born, basically, that has gained seats in the House in a midterm election was George W. Bush, and it was after the Iraq War. Basically, war helps politicians win support. So be very careful about all the rhetoric that's coming out right now from the U.S. and from Russia. So I have a lot of thoughts on that, but I'll leave that for right now and continue on here. So I've got a map here that shows Nord Stream 2. And the key thing about Nord Stream 2 is that it will allow Russia to bypass the Ukraine. And if Russia bypasses Ukraine, then what's going to happen is Ukraine doesn't get the revenue from that. And so obviously Europe's not particularly happy about that because of the relationship they're trying to build with Ukraine. But there's not a lot of choices here. Currently, around 50% of Russian gas to Europe flows through Ukraine. And with Nord Stream 2, that basically means that Russia is going to bypass Ukraine as a transit country. And Western countries fear that Russia starts to gain control over Ukraine again. And Germany is delaying the approval as it uses the pipeline as a sanction threat in case Russia starts a war. Now, my work on this and my study of this is basically there's no way that Russia wants to start a war. There is nothing that Russia is going to gain from that. In fact, Russia's in a pretty good spot. They're not hell-bent on regaining Ukraine. There are Russians who are living, or Russian-speaking people living in Ukraine. And yes, there's an attachment there. But is Russia really willing, is Putin really willing to go in and have a war, an all-out war to take over Ukraine and then fire up the US and Europe? It doesn't make sense. There's not a lot in the Ukraine that he needs, particularly if he gets Nord Stream 2 running to bypass Ukraine. So I think that what's happening is the U.S. is just pushing so hard to try to come up with a war. It's really one of the things I worried after Trump left office was that Biden would come in and start a war, because I believe the people in the State Department behind Biden definitely feel like there's an opportunity. Remember, we had 4 years of a suspect of the Democrat Party attacking Trump and saying that Russia colluded with Trump, and therefore Russia was the cause of the loss of Hillary to Trump. All of that fired up the Democrat Party, and now they're in control, so they're putting a lot of pressure on Russia. Be careful with what you're watching, particularly the news outlets. These news outlets coming out of the U.S. are full of propaganda coming out of the New York Times and others, which has been fed to them by the CIA. So Russia is in a much better negotiation position. I believe that the approval of the pipeline is inevitable to secure Europe's smooth transition to green energy. Right now, there's a few alternatives really to this Russian imports. In case Europe hesitates, Gazprom just is going to go towards Asia, especially China and India, where they have a large appetite for gas. Now, that's not a transition that happens quickly, but that is a transition that can happen. And, right now, what we'll say is that either way, Gazprom's in a very good position. And you could argue that Russia is in a good position. And this is something that I think you really have to think from a geopolitical perspective, that it is an interesting situation right now. My goal always in life is never to fight and never to have war. We do not need it. Politicians pick them, but I would say we need peace. We need peace, all people. Welcome everybody who's just tuning in right now. This is the Valuation Masterclass case study, and we're talking about Gazprom. And I see Dania, welcome. I'll show you the file. You'll be able to download this file. I'll show you how to do that if anybody wants to get more detail. Let's look at the story number 3. Domestic market is still not fully penetrated. What I'm showing here is total gas consumption in Russia and Gazprom's supply to Russia. And we can see that basically Gazprom supplies more than 50% of total Russian gas consumption. Its pipeline network covers even 70% of total gas. Russia gas demand is likely to see a constant growth of maybe 2 to 3% over the next 5 years. And growth could even accelerate once that pipeline infrastructure is extended. 30% of Russia is not even connected yet to that infrastructure. Now let's look at heavy capex allocated to pipe construction. What I'm showing is a chart here where I'm looking at the total amount of capex, and that is the blue line that is rising over time, the depreciation charge, which is a steady line, and the capex relative to depreciation. I use this ratio to try to understand the level of investment that the company is doing. Capex to depreciation has been around 2 times in the past, and continued expansion and further penetration of the Russian market results in a similar ratio over the next years as well. So the point is, Gazprom is investing heavily to expand its business. Now, to answer the question, you can scan this QR code to go to the valuationmasterclass.com, or if you're listening, just click the link below and you can just go to valuationmasterclass.com and access the blog, where you'll be able to access this and all other case studies for free. This case study on Gazprom will take a little bit to get up, so it won't be up immediately, but like all of them, it will be up soon after we present. Now, let's look at the FVMR scorecard here of Gazprom. We measure a stock's attractiveness relative to all other companies. Attractiveness is based on 4 elements: fundamentals, valuation, momentum, and risk. The scale is from 1 best to 10 worst. Here, I look at Gazprom on all of those factors, but I think we'll focus in on momentum right now. Here we can see that momentum has been rising. Revenue growth for the past 12 months is up about 40%. Recurring EPS growth about 200%. And operating profit margin change has gone up by 276 basis points. So a significant change there. Improvement. Also, if you're watching this or listening to it, I've recently created a short online course explaining my FVMR investing approach. I usually sell it for $97, but for a limited time, I'm offering it for free. Just scan the QR code or go into the links below and you can get access to that course. Let's look at the forecast of the company. Analysts are optimistic about this Russian giant. There's 13 analysts covering it, and they have a 53% upside. Now, remember, of course, when we look at the upside of a company, we have to think about foreign exchange. If you are sitting in your home company, home country like the US, or let's say you're living in France and you want to invest in Russia, in Gazprom, you're investing in 2 things. First, you're investing in the currency, and that's the Russian ruble, and then you're investing in the underlying asset. Part of the reason why there's so much potential upside and the stock is so cheap is because of the fact that most people think that the Russian ruble could be under threat. And if it is, you may lose some money in the Russian ruble, but at a 53% upside, hopefully you'd gain something in this company. Now, analyst consensus sees a massive upside for Gazprom. Only 2 analysts are still on hold. Consensus expects strong revenue prospects in 21 and 22, and that's also just keeping in mind that gas prices have been so high. Revenue might drop in 2003 as natural gas prices could normalize. So consensus right now has a forecast in 2023 of minus 11%. Remember, this is a cyclical company. It's driven by gas prices. Now, it's not terribly cyclical because they have a pipeline business that's valuable. Also, operating margin could reach a record over the next 2 years. That's what analysts are expecting. And we've already seen it rise significantly because of gas prices. Now, let's go through the P&L a little bit. The strong bottom line mainly is driven by inflated gas prices. So the company basically in, let's say, 2019, a normal year, they made about 1.2 billion, let's say, or trillion rubles. And now it's up to almost double that in 2021. So they have really expanded their profit margin because mainly of price. In the balance sheet, Gazprom is a capital-intensive business with more than 70% of total assets being net fixed assets. Their infrastructure is the key to understanding the business, and capex is a major component. Expansion of pipeline structure requires high capex in the future. So now let's look at the liabilities to understand how they're financing. Gazprom has relatively low leverage. Its net debt to equity stood at about 0.3. That's very, very low. Let's look at the revenue per assets. Here we can see what we also call the asset turnover ratio, that it's at about 36 or so right now, going up to about 38. It's a capital intensive business. It's hard to get that revenue per assets number up. Let's look at ratios. And here I'll just highlight the gross margin. The gross margin for this business is above 60% over time. It's a very, very profitable business in that sense. The main driver constituted the inflated gas price. But even without the inflated gas price in 2019, you still have a pretty strong gross profit margin of about 56%. Let's talk valuation. I'll review the A-Stot's investment research stock picking checklist now. And it's in a checklist inspired by Peter Lynch's 10 Baggers, which is a stock that's gone up 10 times. He talked about it in One Up on Wall Street, one of the books I first read when I became an analyst. It's based upon our extensive research of companies that are and have been 10 baggers and going back and seeing how they perform. There's 9 factors that we found that drive long-term share price performance. So let's talk about them in relation to Gazprom. The first one is management. Management has a proven commitment to growth. Here, the potential is good. The company's grown at a CAGR of about 7% over the past 10 years. Let's talk about growth. The product and industry can support a decade of 10% annual growth. Moderate natural gas constitutes the transition fuel for the future. High single-digit growth is expected. If transition to renewables continues to rise, then we may not see as good of growth in the company, although they have the ability to transition too. Sustainable. They have a competitive advantage that creates sustainably high gross profit margin. Good. With 16% of global gas production, Gazprom has a significant control over gas prices. What about number 4? Quality. Good earnings quality. Non-core items are small or non-existent. Here it's weak because earnings fluctuate quite a lot given the industry's volatile nature. Number 5 is efficiency. In the long run, sales grow faster than assets. This is weak. It's a high capex that's required, and basically that means that efficiency will always be low. But that's also the case for a lot of these types of companies. The next one, number 6, is tight. Relatively low cash conversion cycle. Negative is best. Here we can say the potential is moderate. The cash conversion cycle is moderately high and stood at 31 days in 2020. But I wouldn't say that's too bad, so let's give them a moderate score. The cash flow, operating cash flow, is consistently positive. Moderate again. Operating cash flow has been consistent over time, but it's not always able to cover the investing outflow. Capacity, number 8. The company has the access to capital to fund growth. Here it's good. It's a state-owned company and the largest Russian company. That gives it a lot of access to capital. Finally, number 9, inexpensive. Valuation is reasonable. Of course, we want to avoid very expensive stocks. Here it's good. It's cheap on both price to book and PE compared to Russian energy companies, but it has a slightly lower ROE. All right, let's look at the free cash flow of the business. By the way, I would sum it up and say there's some good potential that this could be a 10-bagger over the next 5 years, but maybe like a 5 times increase over the next 5 years if they play their cards right. It's not bad, particularly considered in the low valuation. The main thing is you have to consider the Russian currency risk. So free cash flow of the firm is likely to remain volatile, given the abrupt changes that they can get in working capital, but still positive. So let's look at my assumptions right now. I'm expecting about 14% revenue growth over the next 3 years, 57% gross margin, and about a 19% net margin. That's amazing. And basically, the cost of equity of 16.8%, that's very high. The risk-free rate in Russia is high. And then we have a weighted average cost of capital of 10% and a terminal growth rate of 2%. So basically, I'm in line. Russia has a massively high risk-free rate. And now let's look at the free cash flow valuation of the company. My value, again, is Russian ruble 395. That's an upside of 32%. On a bull case, upside of 47. On a bear case, upside of 17. Let's review the world-class benchmarking scorecard for Gazprom. We identify a company's competitive position relative to global peers, and we use a composite rank of profitability and growth called profitable growth. The scale is from 1 best to 10 worst. Here we can see Gazprom is among the top 3 companies in the energy space, and I'm comparing it against 310 large energy companies. Right now, it's ranked a 3 out of 10, so it's getting close to being world-class. On a profitability score, which is ROA, relative to 310 large energy companies, it's ranked a 2. It is a highly profitable company right now. Now, that's driven by share price. Let's hope that they can maintain that. And growth is very high, also at a 3, a ranking of 3, 1 being best, 10 being worst. So it's looking pretty good on this measures. What are the risks? Well, the key risk is political tension, increased efforts of the European Union to reduce dependency on Russian gas, sanctions against Russia imposed by the US and EU, that's the Russian-Ukrainian conflict, and a slowing economy and fluctuation in gas prices. Again, going back to this conflict, if the US puts so much pressure on Russia, you're going to see Gazprom starting to sell to other buyers out there. So the conclusion, natural gas evolves as the most important fuel in energy transition. The domestic market still provides further room to grow, and Nord Stream 2 became a political instrument, but in worst case, Gazprom could diversify to Asia. They'd still lose money on that pipeline, but they can switch to Asia. So to wrap it up, I'll ask you, how much can Gazprom prosper from Europe's energy crisis? I'd like to hear from you in the comments below.